Greetings guys, I welcome you in this beautiful video. So we are going to be speaking about market sessions or trading sessions. So you know that the forex market, it is a 24-hour market, meaning it is always moving during weekdays. So but what you need to understand, it is the fact that the market is not always active. Although it is moving 24 hours in a day, but it doesn't necessarily mean that this market is always active. And what you need to know is that these 24 hours, it is not just a single market. It is a combination of different market or of different sessions. That's why we have more than one market sessions, and all the market sessions combined, they make up the 24 hours, which enables the market to flow non-stop. So we have just 4 major market sessions. We are not only having these sessions, but these are the main ones. We have the Sydney, the Tokyo, the London, and the New York. So these are the main sessions, meaning if you are to pay focus as a trader, you are to pay focus only on these 4 market sessions. Why? Because these are the significant one. These are the significant one, not that these are the only ones that exist. These are the significant ones. So as we are talking about market sessions, so you can observe when the market moves. Let me just make an example. When the market moves, you can see that it is not always active. There is a place where the market will take direction, and there are places where the market will not take direction. You see, there are places where the market is going to be aggressive, and there are places where the market is slow, just like this high here. So these flows of the market, they are caused by different factors, and one factor, it can be the market session, that now this active session, it is closed, or these slow session is now opening. So it can be a factor of the market sessions or the trading sessions. So if you are to see, let me just make an example. Here. So if you are to see here, we have this box here, this red box. You can see that the market inside here, it was in a range, it was consolidating, meaning it had not taken direction at this region here. It was neither going up nor going down. It was just going straight forward. And all of a sudden, there is this breakout here. There is this breakout here, the breakout of this slowdown here. So this breakout here, if you are to look clearly, you can see that it happened just after the New York session has opened, because you can look at my time. If you can see it below here, you can see it below here. So okay, let me just quickly show you the times when the sessions are opening. So okay, as you have seen that one, then this breakout here, it was caused by the opening of the New York session, which is one of the major sessions. It was caused by that. So when the market opened in New York, that's where activity began. That's where direction began. That's where the market began to breathe. So meaning, as a trader, for you to benefit from this, that's why you need to really have times when you open your trades. Don't open your trades at any time, because if you open your trade at any time, you'll open a trade here, and all of a sudden there will be no direction. So you'll be holding a rough trade the entire day. So you need to open a trade in the right time where activity is about to happen. For an example, when you open a trade just before the market opened, or as the market opens, you are sure that the market is going to give you direction, but I don't know whether that direction is going to be in your favor or it is going to be in the opposite side. But what I know is that as the market opens, it is going to give you direction. So why are we trading during these market sessions? It is because of the number of pips, or the amount of movement that we receive. So if you can see the number of pips, you can see that the London session, it is leading. There is too much activity, there is too much movement in the market, and then it is the New York, and then the Tokyo is following. So there are so much pips that you can collect from these highly active trading sessions or markets. So to just add more clarity, let us look at this market here. So you can see here at this red point here, also it was the beginning of the New York. So the New York was opening, that why the market then took direction and collapsed from here all the way down here with huge amount of pips. Same thing applies here. The market was slowing down and all of a sudden it collapsed because it was now what, the London session. So it was a good move based on your timing. If you enter anyhow, it will be troubling. Same thing applies here. It's the New York market slowed down and all of a sudden a breakout on the opposite side. Too much activity, so much pips that you can collect as a trader. So if you are to use market session, guys, it is going to help you so much. Just make sure that you enter your trades only when there is market activity coming in. Don't enter a trade when the major markets are open. So make sure, when the major markets are closed. You should open trades when these markets are open so that you will benefit from these high movements given to you by these different markets. So that's it in this video. Thank you for watching. Remember to like, share and subscribe.